introduce myself and a little bit Azora. I am one of the senior partners of the firm, and I am responsible for business development and strategy. Therefore, part of probably the most important thing that I do all day long is think about what should Azora focus on, what asset classes should we look at, what is it that is the best opportunities based on our skills that we can offer our investors, as well as what are investors looking for? What are their concerns? What are they looking for yield? Are they looking for long-term growth, et cetera, et cetera. So for me to talk about alternative investments, as you will see in a second, well, as someone said, I could be here the whole morning, but I've been given 10 minutes. So who is Azora? We are a private equity firm founded in Spain 15 years ago, very much focused on real estate and a little bit in other real assets, like, for example, renewable energy and some parts of the real assets that we think are becoming, in a way, similar in risk and return profile to traditional real estate investments. And one of the things that I very much believe in is that investors more and more look for cash flow patterns, for risk return patterns, rather than for particular asset classes. And I think the shift to alternative real estate investments very much illustrates that. Because traditionally real estate investors have stayed away from operations, from assets where the amount of cash flow you generate from those assets really drive, for a big part, the value of that investment. Unlike real estate, where traditionally has been driven by the bricks and mortar. And as we've already heard, and as you will hear me, that is really changing. All real estate is becoming a service rather than brick and mortar. So operating an asset, operating a real estate asset is becoming something that as managers we all need to be comfortable with, but also as investors. At the end of 2018, we managed 5.3 billion. As I said before, the firm was founded 50 years ago. We are a large platform because, again, going to this theme of operational intense assets, we've pioneered the investment in rented residential in Spain. Back in 2004, the first thing that Azora invested in was rented residential, to the awe of many people that at the time were only developing for sale. And so over the years, we've built a platform of 140 people where we do all our property management. And we manage residential not only for Azora's driven or sponsor funds, but also for some of the largest residential investors in Spain, like Sareb, like Goldman Sachs, which we're very, very pleased to do so. And maybe because we come from a small country, we've always been focused more on returns than on size. What we look for and what we've always looked for is trying to identify megatrends. And I think that this is becoming more and more relevant as we enter a phase of low growth, as we enter a phase where maybe yield compression is already happening in most asset classes, not in all asset classes. And so trying to look for sectors where there is a good supply-demand dynamic, we think is key in order to create a sustainable portfolio and generate long-term stable returns. We also look for opportunities where we can add value as a manager. And because we are a large platform and because, again, we come from a small country and we've always tried to differentiate ourselves, we are not scared of complexity. We are very good at repositioning assets. Most of the investments we've done, we buy an asset that is well located and we transform it and we refurbish it. And sometimes we invest between 50 and 100% of the initial investment in CapEx in that asset. So we take that refurbishment risk because we have the platform and the skills to manage it. We also love to find assets that are not overcrowded. And Maria Jesus, we saw from your presentation, which, by the way, I congratulate you, the amount of investment that has come to Spain. That means that, whatever you look at, there's a lot of investors trying to access the same asset. So at Azora, we try to find places that are not that crowded. And again, alternative real estate is one of the areas. And again, on this issue of operational assets, we love operational assets because we have the platform, we have the experience, we have teams that are specialized across our asset classes. And again, as with interest rates, at zero or even below zero, after what Mr. Draghi said yesterday, being here to stay, how do you generate some superior returns, if not with an asset that you can manage? Oh, that's a little bit our theory. We've grown, and as we grew, we have entered different asset classes. As I was saying before, we started in rented residential, then went into offices, then went into hotels, and I will speak a bit more about hotels later on. Then we went into student housing, and again, I'll talk a little bit more about that. And we were the managers behind one of the transactions that you put in your slides, which is Hispania, that was bought by Blackstone at the end of last year. So we work with a lot of international investors, but of course we also work with all the Spanish institutional and private investors. And as I said before, we're very much focused on returns, and we've always been focused on generating alpha. I think we've generated always alpha over the market growth. But of course, when markets perform very strongly, particularly in real estate, everyone makes a lot of money. Again, as we come into this new phase of growth, and that's why I think the topic of alternatives is so relevant and timely, we all need to find assets where we will need to generate alpha. And I think that's where managers like Azora, which are specialized in these asset classes, our alpha differential with the rest of the market will be larger. That's a little bit the returns that we've managed to achieve. As I was saying before, we created the largest multifamily rental housing platform in Spain, which went through the whole crisis and still multiply capital by 1.4 times. We are again investing in residential, as you will hear in a second. We also pioneer vacational hotels, and being Spanish and being Iberian, you know very well that tourism, and we're going to have our colleagues from Barcelona, one of our best partners, by the way, in this venture of vacational hotels. It's one of the largest industries for both Spain and Portugal, vacational hotels, and yet, before Hispania, it was hugely underrepresented in the portfolios of international investors. There were, of course, some listed companies, but for the most part, the sector is in the hands of family-owned groups, some very large groups like Barcelona, but also many of the sector is still in the hands of very small groups. So we pioneered the asset class through Hispania, became the largest hotel owner in Spain, and Hispania was sold to Blackstone at a double-digit, close to 20% returns. We also pioneered student housing. We invested in student housing at the end of 2011 when people thought that renting anything to students was crazy. We took that platform all the way to 9,000, close to 10,000 beds, but we sold it in December 2017, generated 30% IRR for our investors. So I think the sector is still extremely attractive, but I think the returns we generated were truly outstanding, and that's because we pioneered at the asset class. I'm not going to bore you with the rest, but as I said, what are our key areas of focus now, and what do we like? And then I will focus on direct lending, but I just want to give you a flavor of what are the asset classes where we still find good dynamics. The first one is still tourism, and again, Spain, Portugal, you see that we see tourism flows into Europe still growing. Millennials travel 6 times per year on average for leisure, whereas we used to travel maybe 3 times only. People retiring, the first thing they do is they start going on holidays. And when you look at the holidays in Europe, around 30 days average, and I don't know if we have many Americans here, but they'll probably be very jealous. The European market is designed for people to go on holidays extremely often. And Mediterranean countries, of course, we have an advantage. So we still believe that tourism will continue to grow between 150 to 250 basis points above global GDP in Europe. The second area that we continue to be very positive on is rented residential. As someone said before, in Spain there's a huge lack of supply of rental housing because traditionally everyone liked to own their house, and also because the Spanish government has been exceptionally slow in releasing new land and in giving permits. And since we have some representatives from the government, I know you're very much aware of that, but I think that's something that will help with many of the issues that are happening in the market. So rented residential, we see huge growth, and we are investing very much in Spain and in Portugal. Now, senior housing, which is like it's in between, if you want, a student house and a rented residential, but very much focused on older people. It's an area where, again, we see tremendous supply-demand positive dynamics. In Spain, at least, there's a lack of senior housing, a lack of retirement homes, a lack of quality retirement homes, and the population is aging at one of the fastest pace in Europe. So we are going to launch and announce in the next few weeks our first investment fund to focus on retirement homes. And within that theme, we are exploring assisted living and housing in the middle of the city, especially designed for elderly people, as well as all the services that can be offered to that part of the population. And we're also exploring how we can monetize the houses that are owned by the population that is aging to help them complement their pension, which even the Bank of Spain has spoken about this. Banks and insurance companies are looking at it. There is no real estate player looking at it. And so, again, we want to pioneer that. The previous panel was asked about development. And we are very, very focused now on development, for example, of high-quality office building. I think in the previous crisis, many of you are very young, but in the previous crisis, in the previous bubble, investors looking for higher returns, they went into secondary cities with high leverage. I think we've all learned from that lesson. And I think now what you're seeing is that one of the best places to look for superior returns is to actually go into still prime locations, but take development risk and not necessarily higher leverage. And that's where you can still end up with a portfolio of very prime assets in prime locations, and yet have some returns that are slightly more attractive. So we are very much focused on development of high quality office buildings. And we're also looking at some of the newer trends, okay? You see at the bottom renewable energy, and I'm not going to talk much about that, but again, it's an area where Spain and the whole of Europe, there are tremendous opportunities, and Spain is a privileged country for particularly for solar and photovoltaic, but also for wind. But the two at the top, I think they have already been, at least the first one touched on, which is how the logistics space is changing, based on e-commerce. But more than e-commerce, I think in a country like Spain, what you see is a return of retailers to the center of the city, the amount and the increase in tourism into the cities. I talked about vacational hotels, but the flood of Americans and Asian tourists, they don't come to the beach, to Europe. Why would they? They have wonderful beaches. But they would come to our cities for our culture. I think cities are becoming overcrowded, and it's becoming an issue how retailers, restaurants, the bars, how do they get all their supply? So, and of course, e-commerce. So we are very focused on logistics and trying to find a less crowded space, which is this urban logistics, and focusing on that. And then last but not least, one that no one today has talked about, and maybe again that means that we're right in Azora. If no one talked about it, that means that it's maybe not as crowded as other spaces, is direct lending into real estate. And that's what I'm going to talk about now. So why do we like real estate lending? First of all, I'm not going to spend more time on that, but you've all heard how attractive still the real estate market is. It's a market that is still growing, where there is still rental growth, and where even someone said there's still room for yield compression in some asset classes. Second thing is there are very, very attractive pockets of significant growth. And what I mean by this is high single-digit or double-digit growth. Residential under rent, I think we're still going to see, and you're seeing a huge amount of development and of investment. Student housing, again, you heard that before, or senior housing. Those are areas where there's going to be a lot of investment, a lot of refurbishment, and that's an area where people are going to need debt, right? And so, in a market that is good, that is still positive, with a lot of investment going into a still, Spanish banks, which have traditionally monopolized the market, are really leaving for the first time very attractive opportunities, very attractive projects that they are not being able to lend to. For example, development, transformational situations where the asset is not generating yield. The banks don't like it. Non-traditional structures where there's not a mortgage, where it's a bullet financing, or let alone when you're junior to someone else, they are not lending there. And then certain asset classes where they see maybe reputational risk, could be senior housing, or where it's an asset that comes from a refinancing. And in any of those situations, you can actually find very attractive projects. I also see very limited competition from other alternative lenders. You have, for the very large transactions, yes, those transactions are being offered to the very large insurance companies and sovereign wealth funds, which are extremely active in this asset class. But beyond a certain threshold, there's very, very little people. And the few players that are starting to look into this asset class, well, we think, we can offer something better. You have right now a lot of direct lending funds, pan-European and global funds, certainly in the US and the UK, which have raised billions and billions of euros and dollars to do direct lending into real estate, exactly because of these reasons. But in the Spanish market, no one has done it. So you have the pan-European funds, which want to do transactions in Spain, but they don't have the reach, they don't have the capability. And the local players that you have in Spain have really never done direct lending, and they don't come from the real estate sector. They come from lending to corporates, and it's extremely different ballgame. So that's why we think that we have here an opportunity to again pioneer completely a new investment side. So this graph, of course, you all know that graph. But it's the one that we very much keep in mind when we look at investments. Are we generating returns that are superior to the risk that we're taking? And I think that we all as investors have the impression that over the last few years we're taking the same risk at diminishing returns, right? And so how do you avoid that? How do we stay above that line? And we think direct lending now because of the things I was saying, because there's a dislocation between the risk of the underlying transaction and the appetite of the banks. It's really giving you a lot of opportunities to put the dots out there. And I'll just give you a few examples. Higher LTVs or mezzanine situations. Spanish banks, for the right structure, they are unbeatable. They can be extremely aggressive, but beyond certain levels, it's not even a question of price, which is the interesting thing, is that they are just not there. So your ability to generate a superior return is extremely high. What I call value creating status, where is the project? It can be a fantastic project, but if you're trying to finance land or finance development or finance a big refurbishment where there's going to be no yield for the next 2 years, again, banks feel very, very uneasy because they are not a specialist in real estate. And so to do these kind of transactions, you need to understand, you need to be able to assess very well the underlying quality of the project. And that's what we can do at Azora. We can look at a piece of land with a residential development, and we have a view about where those houses, which price are they going to sell at, and at which rhythm, because we do it all the time on the equity side. Asset classes, hospitality. And we're big investors in hotels, and we have Barceló, we'll hear from Barceló. But many banks still don't lend to hotels. Why? Because the operational component of the asset, which again, in our case, that's what we like, because that's an asset that gives you the ability to continuously improve the returns. And then the sponsors. I'll give you a specific example. At Azora, we just bought a building where the tenant is a 10-year tenant, a 10-year lease, is a company that has gone into heavily restructuring and refinancing, and many Spanish banks lost a lot of money with this company 3 or 4 years ago. we had a very hard, eventually we got a loan, but only like 45%, and many banks said, no, we're not lending to that sponsor because somewhere in the past, someone in this bank lost money with them. And then arbitrage opportunity, where there is complexity, where a sponsor is in distress. So all of these opportunities, again, we think that can allow you to put on transactions above the risk-return line. So I'm gonna leave it here. We think there is a great opportunity, not only for us, but for people like Azora, to approach this business from a very strong understanding of the underlying real estate project. We're not only going to do sensitivity on the cash flows, we're going to have a view of the rents in that retail development, the price of the housing, or how many students can go into that student house. So we know it's a new asset class for many real estate investors, but I think that it's a great complement for anyone that has traditionally invested only in equity. At this point of the cycle, we see many projects which we will lend to, but we will not buy the equity because we don't think the equity is going to generate the proper returns, whereas on the debt side, the project can be very, very solid. So that's it on my side, and thank you, and sorry if I went too long.
That's great.